Good afternoon, well, I believe it's still morning. Good morning, everyone, and thank you for joining us. We're happy to be here with David Lang and Josh Kilmer, two of our independent agents that work with our Keystone municipal insurance program and service your needs, both from a coverage and risk management perspective. They are here to talk with you this morning about myth-busting municipal insurance. So we will have a Q&A at the end as well. And I want to welcome to the screen David Lang to start the presentation. Thank you both.
Thanks, Lori. Yeah, today we're on a 3-hour cruise of insurance in municipality. No, not 3. Half an hour, 45 minutes, something like that. Okay, just kidding. So today we're going to discuss some of the things that we see, myself and Josh, as either commonly misunderstood or overlooked things when it comes to municipal insurance that come back to haunt municipalities, either from a budgetary standpoint or from a coverage standpoint, what ultimately becomes a budgetary problem for a municipality. Between Josh and I, we here at Duncan insure north of 100 municipalities in the state. I know Josh insures hundreds. I'm the Chief Risk Officer for Duncan Financial Group and one of the executive partners. And I'm an instructor for the Institute of Work Comp Professionals and also sit on the Technical Affairs Committee. So if you look at the bottom of some of your insurance policies and you see ISO, Insurance Service Office, I'm one of 6 people that consults for the ISO itself in terms of their coverage forms. As I said, Josh, my friend Josh, is the president of the Kilmer Group. He actually sits on council where I have not been on council for almost 20 years. Between the two of us, like I said, we have seen quite a bit when it comes to challenges that municipalities have faced. So pretty simple goal today, understanding the misunderstood areas and what things that you as municipal leaders, borough leaders should focus on. So why exactly is insurance misunderstood? Well, you know, if you think about it, you receive a piece of paper that's a promissory to pay your claims. People buy insurance to pay their claims. But that paper is all that is. It's a promise. And when you look at it, you know, I like to jokingly say, what do donuts, Swiss cheese, and insurance have in common? You're correct. Holes. Business leaders, as well as municipal leaders, tend to focus on what they can see. But with insurance, it's what you cannot see, the limitations, the exclusion, the confusion or hidden costs that come back to bite you, the holes. Plus, with how many challenges municipal leaders face today, the pressing issue is typically what they focus on. And too often, important insurance decisions or discussions tend to get tabled for a later date and may or may not ever get picked up. That's why we're highlighting these today, because these areas are often overlooked and, more importantly, misunderstood. So let's start with the first one. Myth number 1, workers' compensation is insurance. Well, you do buy an insurance policy, let's call it, and you do pay a premium and they do pay claims, but why is work comp not insurance? Workers' compensation is the only coverage, so to speak, with an experience rating right on your policy declaration page. That experience rating either rewards you for good claim history with a credit or punishes you through a surcharge. Every policy, no matter what, has an experience rating. It's either calculated by the Pennsylvania Compensation Rating Bureau or the trust that your municipality is in. Doesn't matter, whether, like I said, you're in a trust or municipality, you have an experience rating. And the problem is that with all the information, all the things that a municipal leader has to focus on, A lot of times you hear, hey, our workers' compensation premium is going down this year, so you think that's a good thing. But in reality, we cannot tell you, between Josh and I, how many municipalities we've visited with or worked with when we first met them had a surcharge to their workers' compensation, meaning that they were paying more than the average municipality. And although, like I said, if your premium is going down, but what if you're still being surcharged 20, 30, 40, 60%, or even double based on your past history? That means you're paying more than you should legally have to pay because of your past claims. So in essence, your experience modifier, although this might be a little tight and blurry, is based on 3 years of payroll, your actual payroll. They multiply it by an expected loss factor to determine your expected losses. Then they take your actual losses and compare the two. So they're comparing you to the industry average. And in this case, you can either be credit or surcharge. It doesn't matter if you're a small municipality or a large municipality, every municipality has this rating. It's important for you to know because there is a lot of math behind it, and that's where it becomes a little vague. And it's easy to focus on the premium because that's what you have to cut the check for. That's on the front page. But when you actually look at the rating page of a policy, where you see the payroll and rates and everything, you see your experience modifier. And because every dollar that goes into your actual losses, for every dollar that the insurance company or trust spends on your behalf, increases your modifier. For every point increase in your modifier, it increases your premium for 3 years. We are at Keystone Trademark work comp payback ratio because we actually have software that can calculate how much each claim that you have at your municipality costs you an insurance premium and tell you what the ratio is for every dollar that the trust or insurance company spends to how much you will repay to the trust or the insurance company. And surprisingly, it will be more. You will pay back with interest your claims. In fact, the only time that the insurance portion kicks in is when you have a larger, more catastrophic type claim that might be $50,000 or $100,000 or more. That's when the insurance side kicks in. So if they're comparing you versus your peers, what would a 1.0 experience modifier earn you if you were in school? What grade would you get? Well, average is C. No, would you be happy if your child came home back with a C? It probably depends on the child, but nobody really likes to have that C. So ultimately, you need to look at it as you, as the employer, pay the claims, not the insurance company. So the more you can focus on controlling claims, the less you will pay out in workers' compensation insurance. It's also important to know that there's a selfie moment, as we used to call it the Kodak moment, until people, when I was instructing it, says, who's Kodak? But the selfie moment is when your data is used to calculate your experience modifier. And it's typically 6 months after your policy expiration. Your payrolls and losses to date, paid in reserve, count towards your experience modifier. So what we look at is 3 critical analyses. First is your minimum experience modifier. How low can your experience modifier go? And we'll talk about a little bit more on that, but there's an actual mathematic minimum that you can get to. Then there's the controllable experience modifier, the difference between where you're at today and where you could be with your minimum experience modifier. That ratio tells you how much of your premium each year is going towards paying for past claims. And ultimately, that ultimate cost of injury is how much that injury costs you over the 3 years. These are the critical things you need to understand, because we also find that 10% of experience modifiers are incorrect and 90% of are mismanaged. A lot of times what the way an insurance company manages a claim may or may not be in your best interest, and ultimately yield the best result, because an adjuster may handle, north of 100 open claims. And that's a lot of balls to juggle in the air. So your priority, your claim might not be the insurance company's priority that day. Now, I will also make a quick note here. The question you have to ask yourself is, does your experience modifier today include your volunteer fire company? Some municipalities have separated them. Some have them combined. Even if you have separate workers' compensation policies, one for the municipality, one for the volunteer fire company, it is possible and common for the experience modifiers to still be combined. So you have to look at it and do an experience modifier analysis to determine if separating the rating could be a positive or negative in terms of an impact on your insurability or your premium. I remember running into a municipality in Westmoreland County that was in a state fund, was getting a roughly 25% surcharge from their experience rating. And when we did the analysis, the reason why nobody would write them is they've been surcharged for quite a number of years from an experience modifier. That surcharge was actually coming from the brave firemen that were responding and servicing the community, and not from the borough employees. When we looked at it and did the analysis, by breaking them into separate rating sectors, the municipality was able to get out of the state fund and save premium. And number two, the fire company was small enough that it fell from its own experience modifier to a merit rating, which also saved premium. So ultimately, you have to look at it and analyze, is it costing you money to have the two together or separate? Also, for quite a period of time, as you know, with the Cancer Presumption Act, there's, typically one, maybe two insurance companies that will insure the volunteer fire company with the borough on the same policy. The interesting part about this is most do not realize that the insurance companies that do that have adjusted the rate for the volunteer fire company to a point where it may actually be more economical to separate the policies, because they put their rate for the volunteer fire department and for your municipality close to the state fund rate. It's kind of intriguing. So ultimately, you also have to understand that workers' compensation does not pay for a lot of things. It pays for medical and wages, but it doesn't pay for the cost of your employees to do their investigation. If someone's injured to a point where they can't return, for you to try to hire and retrain and replace somebody. Deal with overtime because you still have to get your projects done. You can see there's quite a number of things, including the issues surrounding Heart-Lung Act that can be a concern, that are not covered by workers' compensation. So one of the things that you need to look at, and as I mentioned before, we've talked a lot of borough leaders that were happy that they heard their work comps going down, but when they've done their analysis, got their executive briefing, as we call it, or their municipal leader briefing, they found out that they're still overpaying because of the effect of the experience modifier. So what we provide them is a calculation of what their minimum is, how low their minimum modifier can go, so that you can benchmark. If you don't know how low you can go, how do you know if you're having a good premium or a bad premium when it comes to workers' comp? You can benchmark yourself, what's the claim amounts that you were having versus what's expected. We talked about the payback ratio, how much you are repaying to the insurance company. And it may be $1.50, $2 for every dollar that the insurance company is. Think of it this way: would you float a bond with a 50% interest rate? I think some of your constituents might not be too happy with that. That's what happens with workers' comp. And ultimately, we can actually rank you compared to other municipalities in the state. So there's a lot to workers' comp that, as a municipal leader, you should look into to determine, are you doing a good job or not a good job? And are you managing your safety, your claims, your employees to drive you down towards your minimum, so that ultimately you also earn the best rates? Now, as we go through this, the chat box is open if anybody has any questions. And before we jump to the next subject, anything you might like to add to that, Josh?
No, the only piece, there's two parts to it. One, the Cancer Presumption Act. Actually, you hit on that, David. And so that's a very common issue we run into in more municipalities than you think. And a lot of it boils down to the expertise, in particular, the agent that you're dealing with. If they don't deal with municipalities very often, so it's a frequently overlooked piece. And the one other part is on things not covered by workers' comp. It's sort of new with the mandate rolling out this past spring, I think, is the mental health evaluations for officers. Currently, that's not really compensable underneath the workers' comp law as it stands today. I think they're working to change that a little bit for better or for worse. But just be aware that when those officers come in and request a mental assessment, that's typically not compensable underneath the workers' comp, unless you check a couple of boxes within. You have to hit some criteria in order for that to happen. So just those two items were all I had to add to that.
Yeah, good points. With the expansion of volunteers and now the mental action, the law changed the what was available, but if you read the actual statute that passed, it does not say that it changes the workers' compensation statute. So there you're going to have the rub between what's covered from a mental standpoint on workers' comp versus. So if it is a situation where you have an officer that is involved and actually, unfortunately, has to shoot somebody, that could be construed as potentially one, whereas if they're just a witness, they might not be. So there's a lot of little nuances that have to shake out. So good points, Josh. So let's talk about public officials' liability. There seems to be a lot of confusion relating to this because when you receive the proposals from an insurance agent, you see public officials and employment practices liability coverage. And you see a dollar limit. And it may even go into your umbrella. But there's a lot of things that it doesn't cover. So general liability, auto liability, your standard policies, as we call it, cover for compensation for bodily injury and property damage from cover causes of loss. And the defense is outside or in addition to the limits you have on the policy. Once again, it's for bodily injury and property damage. It does not pay for any decisions that counsel makes, the financial impact of those decisions, demands to change decisions, any kind of action relating to that or financial impact for different things like zoning and general liability doesn't pay for it. And it also does not pay for the police legal liability. So there's a lot of things that are not covered there that we have to turn towards public officials and employment practices liability. And also with regards to police legal. So this actually should say employment practices liability insurance, but public officials liability is for the decisions that counsel make from a covered loss. And it may pay for defense and damages. It may pay for just defense. It may only pay partial defense. Now you can start seeing why, okay, what happens? So depending upon what occurs, you may have coverage for settlements or judgments. You may not. You may only have defense coverage. You may only have limited defense. And defense costs, depending upon the insurance policies out there, the defense may be in addition to the policy limit, meaning that if you have $1 million policy, we can pay up to $1 million judgment, and the defenses does not affect that. Or it might erode the insurance limit, meaning that if we have to pay $300,000 to insure the municipality, you now only have $700,000 available to pay a settlement or judgment. So you have to pay attention to the policies themselves as to what is defined as covered, not covered, and what is defense costs. So when you look at definition of a wrongful act, the first thing I'm going to bring up to you is there are no standard policies for public officials and employment practices liability insurance. So you actually have to read each single one and look at it, and you'll see a definition of what a wrongful act is. And it could be very broad, it could be very narrow. And just because it is a very long section does not necessarily mean it's broader. Because what we've seen is some could be very short, and just because they're very vague and broad terms, it's very broad. And the ones that are longer are actually trying to narrow down exactly what they're trying to cover. They're being more restrictive, so the more they describe, the less likely they are to cover something. So it's something you have to pay attention to. We're going to get into a little bit more on this. So there also could be a settlement or hammer clause, as they call it. So if, let's say, your insurance company wants to settle the claim, but you as counsel and the municipal leader don't want to. The insurance company thinks they could settle this for $100,000, but you think we should fight this. Well, depending upon how your policy is written, you may have to pay, if you have a settlement or hammer clause, you may have to pay a percentage of the claim in excess of what they believed they could settle the claim for. So and it's all said and done, the cost of settlement is $300,000, you may have to pay 10, 20, 30, 40, 50% of that amount. So let's say it's 40%, $200,000 increase, you're going to have to cut a check for $80,000 to help cover the defense and to cover the settlement. And then if defense is part of that, they'll say, we'll cover the defense up to the time frame that we feel we could have settled this. Everything past that, you're paying that 10, 20, 30, 40% or more for that. So you have to pay attention if that exists in your policy. So when you start digging into how defined is the wrongful act, does it include actual or alleged errors, or some may be only actual versus they just misstatements or misleading statements, acts, omissions, neglect on behalf of the municipality. Does it include breach of duty from, let's say, one of your counsel? Some of the policies, when we've read them, and we'll show a clip from it a little later, Josh and I compiled a 29-page report on all the various insurance companies and all the various terms and conditions that exist in public officials and employment practices liability, so that we could compare insurance company to insurance company, and they are all different. So for example, we had a, when there is a judgment or settlement, it is common for the judge to award sometimes to pay for attorney fees, as well as interest charges from the time that the incident occurred to the time the settlement came. Some policies cover it, some do not. Some policies exclude, if you're broadcasting, particularly today with COVID, I know a lot of municipalities went to broadcasting their council meetings over the internet. Well, that's a different coverage from a media liability standpoint that you may or may not have. And then the question becomes do you have defense costs for things like non-monetary damages? Some programs include monetary damages up to policy limits, and I can only think of one. And there's a whole bunch that put a sublimit on it. I know the Pennsylvania Boroughs program and the Keystone program does not have a limitation on monetary damages, where everybody else has some dollar limitation, meaning that once the defense costs exceed $10,000, $50,000, $100,000, you're on your own. Then there's issues relating to land use, zoning, or code issues. And I know Josh had, I believe you said you had some claim examples that from land use and zoning that you wanted to share.
Sure. The first one actually falls under the non-monetary damages piece of it. We have a larger developer that was suing a large entity near Harrisburg because they felt that the fees that they were charging were unconstitutional for the development. And that is resulted in significant legal expense because the way they've structured the lawsuit, it's potentially precedent setting within the Commonwealth. So we're currently north of $300,000 in legal expense in 3 years into this claim. Unfortunately, they are with the boroughs or the, well, it would be the same program the boroughs use, but the same company that would allow them to have up to the policy limit to defend this. If they were with any of the other insurance companies within the Commonwealth, that would have been capped long ago, because I don't see this settling for anytime soon, and for anything under $500,000 probably at this point. So that falls under the non-monetary piece. As far as the land use zoning, we have a significant one with were not a client of ours when this went down, but they have since become a client of ours because we talked about this. It was a group of residents got together and sued the municipality because they allowed a pig farm to go in. And it was a group of doctors and attorneys who lived in a neighboring housing development. And they felt that because, I don't know if anyone's been around a pig farm, but they don't smell great. And they can be kind of noisy. And so they actually sued the entity to deal with that. And that was north of $200,000 as far as the land use type of suit that came into play. So there's significant costs that are associated with all these decisions. And in particular, everybody keeps saying COVID. That is really drawn out an already drawn out process when it comes to arbitrating these risks and litigating these suits. So those are just two coverage examples. We've sadly many more, but I figured those would be relevant for today, Dave.
Yeah, there's a local municipality here that spent, well, let's just say north of 6 figures to try to keep a business from moving in, because there was already a business in the area and it would cause traffic congestions, noise issues, things like that. And they did not want it in there. And ultimately, they just ruled recently that it could go in there. And they did not have the defense covered. Then there's breach of contract. This is pretty much excluded by everybody except for the boroughs program. And we've seen a rash of what we call predatory contractors that they know that breach of contract is excluded. And I'm not talking municipality, reciprocal exchanges for services. I'm talking you hire a contractor, let's say to paint your water tower. They say that they think there's spalling on the tank. Your engineer says doesn't need to be done, but they'll claim that your public works director gave them approval to proceed, or replacing a catch basin. We've seen a number of these over the years, and they sue because they know that you don't have defense coverage, in which case you're going to settle and they're going to get additional money. We ran into one with a water tower that had done 7 previous suits for the exact same thing with different municipalities. So we do know that when the Boroughs Association came to Keystone, that was one of the things we didn't want to have surprises for the boroughs. Because of the limited budgets, we can't afford to have, we have to reduce how many potential unpaid claims might be out there, and breach of contract is one of them. If you get sued over, let's say, any kind of tax change, debt change, things like that. So ultimately, you have to look into, say, do you have coverage, or is there a sublimit, or is there even no defense coverage, for what you have? As we then jump to employment practices, once again, we're back to It's for the council's decision relating to how you manage your employees. It's like employee management malpractice coverage. And once again, it's got to be from a cover cause of loss. As we said, the public officials, there may be defense and damages, maybe just defense, and it may be limited defense or even potentially no defense. Once again, it's whether claims defense costs are inside policy limits or outside does have a bearing on how much you can afford to pay out in a settlement or judgment. So then you have to look at, once again, what is a definition of wrongful act? There are some out there that, if you saw it, I can show you the actual pages from some of the insurance company, that discrimination is not a covered term under employment practices, which is just flabbergasting. So, Josh, I believe you have a couple stories that you have with regards to claims.
Sure. So for EPLI, this we went through with a client a few years ago. The wrongful termination of a police officer, that can always be a sensitive issue. In this particular case, they terminated an officer, and it was deemed that they did not terminate him for cause. So the officer fought pretty hard. And so defense costs were north of $100,000. In addition to that, they're required to hire the officer back. And then they were on the hook for over $40,000 in back wages that he would have been paid while he was terminated. So you have to be really precise in when you're going through the language of your policy, because those are frequent items that there are sublimits for, particularly back wages. And you might think, oh, well, $25,000 seems like a lot for back wages. Well, really, especially if you have police or paid fire on your staff, that's not going to probably touch it if you get into a significant lawsuit. So that's one of them. The other one is for the abuse and molestation coverage, Dave. I didn't know if you wanted me to get into that.
Yeah, go right ahead.
So abuse and molestation, this was a pretty unique situation. Since they've added that to the list of ways that you can pierce the tort immunity law within the Commonwealth, this was not our client at the time. They had a daycare that was run by someone else within their borough building. They neglected to review the insurance contract with them, as far as a hold harmless goes, being listed as additional insured on the policy. And as you might expect, there was an abuse incident that happened there within the building at the daycare, but they were also named in the lawsuit. And there was no coverage available because that was excluded and not added back within the confines of their policy. They were not very happy that they didn't have any coverage for that, because it resulted in probably $40,000 of expense to that particular entity. It should have been covered, first of all, if the agent was competent enough and went through that, or secondly, if their solicitor had recognized the contractual issues behind it. So there were a couple of mistakes there, but anyway, those are just two that I had, Dave.
Yeah, good point. Yeah, so doing review of risk transfer issues within a municipality is critical. So then the other question becomes, who's an insured? Obviously, the municipality, current council, but does it include things like employees? So if a coworker sued over something or employee sued, are they covered? Are all your subcommittees, for the volunteers covered? Past or future volunteers? We have actually seen situations where, let's say, a council person passes away, and at the time the decision was made, they named the council person, which now means their estate or the heir is now, and there are some policies that do not cover all of these various entities or individuals as who is an insured. So shifting from the public officials to property. And a lot of times we hear, hey, we got blanket property coverage, everything is good, we have everything. Well, that's not necessarily the case. In the book, The Insured to Fail, after interviewing 86 businesses that failed and another 36 that needed to pump, hundreds of thousands or millions of dollars into their business to survive. The common theme as to why businesses do not suffer or do not survive is they've made too many assumptions. So the Insurance Institute of Business Health and Safety, so somebody from the insurance industry, said that approximately 25% could not afford to rebuild. Another 25% closed within 3 years, which means over 50% failed to survive despite being insured. So making assumptions when it comes to your coverage, they didn't understand where the holes were. We talked about, donuts, Swiss cheese, and insurance policy. Where are the holes in your program? What is covered? What is not covered? And too often they believed all insurance policies are the same. So the first thing you have to understand is the property policy starts with what is covered property. And it starts with, your building, the business personal property, the municipality's personal property, property in the open or in an auto. So you have to watch out for this because there's limitations, and property of others. Those are examples of covered property. And so that you have to know what is listed on your policy as being covered property. And then how much are they insured for? There might be something as an endorsement to add, say fences and things like that. But once again, there might be a limitation to, when I say property open or an auto, it has to be within 100 feet of the premise, or in the terms of the insurance policy, a premise is the physical building. It may be extended to 1,000 feet, but it creates an issue where we see municipalities, they pick up a short storage shed, they get a cargo container because they got some material that they're going to install in the next summer and they want to protect it. So they put in a cargo container out, in the parking lot. Those are not in the open. So it's not. Then you talk about, they specifically list things for property not covered. So let's imagine your borough building has a fire. It is burned to the ground and you have to rebuild it. Let's say it's $500,000. So during the course of construction, the contractor proceeds to excavate, puts down the foundation, pours the footing, backfills and everything, sends you a bill for, let's say, $100,000 for that foundation. How would you feel if the insurance company said, thanks, but foundations, backfilling, and excavations are not covered property? How do you build a building without a foundation? That's always a good question. So roads and bridges. We see a lot of times, not so much the main roads and bridges, but we get into, what about your parks? What if you have bridges in your park and let's say they get damaged, or let's say covered wooden ones that are covered, if they burn? Like I said, anything that's more than 100 feet from a covered building or structure. So you have to look at traffic signals, pump stations, memorials, all these things that are not physical, normal, four-wall brick structures that you have to determine, are you covered for them or not, and how much? I believe you met with some boroughs that have had this, same issues with borough property not covered, as it was not on the schedule.
Yeah, we're seeing it a lot with entities that we're just trying to make sure we're covering by endorsement, because there are some coverage extensions that pick this up. But I have one recently that they got a grant to install several different traffic safety signs that had solar panels attached to them, flashing lights. So the cost for each one of these signs was 12 to 14 grand. And they never thought to add them to the insurance policy because they're out on the highway. They're just street signs. It just didn't, they didn't think about it. And they had an uninsured truck smoke into one and obliterate it. And obviously the vehicle didn't have any insurance on it. And so there's no recourse there. They turned it into their insurance. Fortunately, we had added by endorsement that had a limit of, I think, $50,000 on it, but it was able to cover that sign and some of the others. So we're able to try and do this, but there's traffic signals are currently severely undervalued at many of the entities we're looking at right now. Actually, just building values are severely undervalued just with the supply chain issues that we're having. The cost to rebuild a structure is significantly more than it was just 18 months ago. So there's a lot of property issues that are creeping in right now that you really need to address.
Yeah, good points. So when it comes to blanket, because a lot of municipalities have a blanket policy, you have a schedule still in the policy of all your locations and structures. And then you have your statement of values, the list that you send to the insurance company that makes up that total limit that's in the policy. So if it's not listed, it's not covered. Blanket does not mean everything. Basically, if you think you're nice and warm and toasty under your blanket, well, if you miss it, it's your feet are hanging outside and freezing from your blanket. So if it's not specifically defined, it is not covered. You also understand that co-insurance clause is not necessarily a bad thing. It's designed to make sure you're insuring the value. So if you see 80%, you have to be within 80% of the total value, and they'll pay your whole claim. It's not that they're going to pay 80% of the claim. They're just saying, we want you to be within 20% of the actual values so that we're getting a fair representation of the premium for the risk for insuring, not just the small claims, but up to, a total policy. And then you have to watch. We're seeing a significant number of insurance companies that are sneaking in what we call a margin clause. It's an actual margin clause endorsement that ISO has. And it says is, if let's say in your statement of values, that $500,000 building we talked about burning, you had listed at $400,000, and the margin clause says 110%. Well, they're only going to pay 110% of what you listed it for on the statement of values, or $440,000. You'll be short $60,000, although you see this big blanket limit of, maybe a couple $1 million. So you have to pay attention to what's on the policy. And as Josh is just alluding to, how do you determine the values of your property that you're using to insure? Things have changed dramatically over the past year. So you have to look at that. So myth number 4, all insurance policies are the same. We hear this time and time and time again. We want an apples to apples quote on insurance. Well, if the public officials and employment practices hasn't convinced you, if the the differences that we see in property endorsements, you can add endorsements to add coverage, you could add endorsements to exclude coverage. There is no such thing as apples to apples. So what do you do? There are basically 2 entities that write insurance policies. There's the Insurance Services Office that I alluded to before, ISO, and then it's your insurance company itself creates their own forms. So when you look at it, you have to see if it's ISO, you kind of know the core policy is the same, definition of building or lack of not covered property not covered, like your foundation. So what additional coverages have been added? Have foundations been added back in, for example? Or what additional exclusions may have been added? And then if it is the insurance company, it creates a form. You really have to read it. To give you an idea, this is a sample, just one of the 29 pages that we use here at Keystone as part of our coverage analysis for just public officials and employment practices. Every policy states public officials with that, certain dollar limit, but it's the holes that you don't see that will come back to haunt you. As you can see, the program, like just real quick, we talked about attorney fees, judgments, interest, things like that. There's 2 programs that, one includes it for both the directors and officers, or the public officials and the employment practices. Everybody else excludes it with the exception of one that includes it for employment practices. And this is actual policy language that we're looking at. We're not just, we back it up. So RTFP, read the full policy. You could probably insert some other F word, but we will jokingly not say that today. So lastly is we get a lot of questions relating to government immunity. There's a lot of times that new council, new leaders think that, well, government has immunity. Well, I'm not going to spend a lot of time on this. We have an article that was recently written, I think in the past year relating to this, that, Pennsylvania's Political Subdivision Tort Claims Act says you can't sue local subdivisions for anything except these things. However, I will also tell you that, let's just say, this seems to get pushed and prodded and expanded over time. So the $500,000 cap is once again soft, meaning per claim. What if you have multiple claimants? We've also seen judgments for certain events or issues that have popped up that have exceeded $1 million. Particularly when we start looking at police professional and things like that. We had a wrongful shooting, one that I believe settled for about $2 million over here in Western Pennsylvania. So while, like I said, while judgments might be $500,000, attorney fees, pre-interest charges, all that goes on top of $500,000. So you got to understand that your policy limits are going to get eroded pretty quick, especially if there's multiple people involved. And if your defense costs are within your policy limit, you're going to exhaust those limits even faster. To give you an idea, the average cost of a defending an EEOC complaint at the Pennsylvania Human Resource Commission or the EEOC is almost $100,000 just in defense costs. Then if you actually end up in court, the average cost of an employment practices defense case exceeds $250,000. So, and as Josh alluded to earlier, if you do not have the coverage listed in your policy, even though you may be you held not liable, you may be perfectly innocent. If you do not have coverage, you do not have defense costs. So it's important that you have the coverage so you get defended. Otherwise, the municipality is taking money out of their budget that should be used somewhere else. And obviously it's going to have an impact. In addition, if your defense costs are within your policy limits, once your defense costs exceed your policy limits, and I have seen this in my career, the insurance company is no longer obligated to defend you because they're like, we spent our money, we're tapping out, thank you very much, but you're on your own. So you have to pay attention once again to what is covered and what your limits are. Anything else you could think of, Josh, as we go into the wrap up and action steps for everybody?
No, I think you hit that right on the head, David.
Okay. So first off, know how much your experience modifier is costing your borough. It is typically workers' compensation is a large amount of a municipal's insurance budget. And there's a lot of money wasted when it comes to workers' comp because safety isn't managed, claims aren't managed, and you're not managing to your minimum experience modifier. Read your policy and not your proposal. It's important that you understand what is covered and what is not covered. For property insurance, take the time to know what you have, where it is at, and if it's insured. And also know for what causes of loss it's covered for. For example, flood is often excluded, but I can't tell you how many times we've run into municipalities that approach us and say, hey, can you help us get this thing covered? Because the carrier that our agent has them with doesn't cover it, but it may have been from a flood, even though they're not in a flood zone or floodplain. Might be from a flash flood. Once again, remember, there is no such thing as apples to apples. Your policy needs to be tailored to your borough and its needs. Nothing clearer hopefully I can convey to you that do not assume, think of it this way. How can you, when I going back to your policy and your president, how can a 300-page policy be summarized into a 10 or 15-page proposal? Think about that for a second. And the print on policies is, like this big, and a proposal probably is double the size in terms of a font. It can't be done. You have to read and understand what is and is not covered. And ultimately conduct a coverage analysis. In other words, know where your holes are. If you don't know where your holes are, how do you know what could come back and haunt you? But ultimately, when it comes down to it, don't chimp out on insurance. Getting higher limits is not that much more expensive, and it's better to have the limits available and not need it than, as you know the expression, and need it and not have it. So with that, I will see if we have any questions. We went through a lot and went through it quickly. I do have our contact information here available for you. I'm here in the West and Josh is over in the East. Hey, I should have worn Steelers and you should have worn Eagles. That's what we should.
Oh, no, I'm a Giants fan. I'm sorry. I can't. I'd get sick if I had to wear Eagles gear. But one thing I did want to say, David, is while we advise you to read your policies, we know you're not gonna, right? So it's have an agent that you know and trust that understands municipal insurance. It is a very specialized marketplace. And if they don't write a bunch of them, then they probably don't understand the nuances that go into a municipal policy. Too often they rely on the insurance carrier to explain to them what coverage are necessary. And I'm telling you, it's not in the insurance company's best interest to have that loss covered. You need someone that's an advocate for you and someone that understands municipal insurance.
Good point. And the other side of it is, I know you and I, we both do a detailed risk analysis of any new municipality that we bring on into the program. I can't tell you how many times we've actually seen municipalities with somebody that has a number of municipalities insured, but they don't take the time to do that analysis. And we go in and we find the uncovered traffic signals, the pump stations, the park properties. I mean, we went into one of the ones locally that I know my grandparents were from, and they had a deck hockey rink that didn't have any of the property covered. So yeah, it's not just that somebody insures a bunch of them. It's, do they have a process to analyze what do you need? Do that coverage analysis, determine what you need so that ultimately you increase the likelihood that your claim will be paid. So any questions out there?
David and Josh, I'm not seeing anything in the Q&A at this time, but I would certainly open, if you'd like to open your microphone, it is a small group, and offer a question directly. That would be fine. Danny and Deb are both on from the Boroughs Association as well. So if anyone does have questions that they'd like to address to them about Keystone and our insurance programs, I'm sure that they would be willing to entertain that. Deb or Danny, do you have any comments or questions for these two esteemed gentlemen?
I have to open up the phones here.
Thank you, David.
Oops, it's not.
It looks like it's open, David. I think.
Yep.
Yep.
Can you hear me?
Yes.
Yes, Deb.
Hi. Hey, I don't have any questions. I just wanted to, step on here for a few minutes and just say thank you both for hosting this educational webinar today. I thought it was very informative. I appreciate you both being active and supportive partners with the association. I appreciate your commitment to helping our members with their workers' comp insurance coverage, whether it's with the trust or through the Keystone program, either option. So just wanted to say thank you very much for your experience and your expertise and being willing to share that with our membership.
You're welcome. Thank you.
Yeah, you're quite welcome, Deb.
And David and Josh, we're going to share this out to the boroughs as well. And I quite frankly think we should share it out with our Keystone agents who are also agents that work with this program alongside of you. I think it was very informative. I think that the topics that you touched upon are those that many times individuals don't think about the need to look at higher levels of coverages or ask the questions about because it's something that they just think is automatically covered. So I do appreciate your calling that out in this webinar, and I think that you have now busted a few myths about what is and what is not included. So thank you.
You're welcome. We probably could have gone another hour and hit a couple more on it, but I think everybody's got a good feel for it. Take the time to understand what you have, and more importantly, take the time to make sure that the agent is, well, I guess, looking at and helping to analyze what exactly do you need. Just giving out a summary of insurance and loss runs and asking for quotes is actually a recipe for disaster.
Well, and I'll tell you, right now, there are more companies that are dipping their toe into the municipal marketplace than I ever remember. Mm-hmm. And that's not necessarily a good thing because there's not a ton of due diligence that goes into their forms when they crank them out. So we have companies that are coming in and trying to buy pieces of the marketplace that really have inferior products on the market. And so it really muddies the waters when it comes to putting together a good insurance program for sure.
Very good point, Josh. Yep. If there's nothing else, David, you can go ahead and close everything for us.
Appreciate everybody's attendance. Thanks, Lori. Thanks, Josh. Thanks, Deb. And if you have any questions or need anything, don't hesitate to reach out to Keystone or Josh Rye. And Thank you and have a good day.
Thanks, everybody.
Thank you.